Hello, and a massive hello to everybody. Hope everybody's having a great time. This is 50 Pips, 12th of February, 2017. No trade calls, no recommendations, every response for their own stuff, and we're here for educational purpose only. So, what's going on? What's going on? As the melt up continues, and as we get ready for Auntie Janet, basically, this week, basically Yellen's testimony is going to be probably the most important thing, bar any kind of tweet or anything coming out of Trump or the Trump administration still in this 100-day marathon, right? So basically, that's the major event risk, and we'll have to see what happens out of there. But clearly, there's a lot of potential moves, especially on the USD. As I said, as the melt up continues to new highs, there's not much to look at in terms of the Dow, NASDAQ, or ES. There are targets to the upside. I mean, in the daily sessions, we'll talk about that and tactical plays. But in terms of the bigger picture, I think the only thing to look at, or at least that warrants some possibly interesting conversation here in the weekly update, is basically the Russell, right? So keep in mind that as all the other equity indexes are going to new highs, the Russell is struggling a little bit here, right? This is the weekly chart. So if we flip over to the daily, you can see what's happening is here we're kind of stuck, right? And it's not behaving like the other ones. So you see that it's getting sold. So the big question is, what are we going to do? Is this the last man standing? Is this going to hold? Is this not going to hold? And we've discussed about this, quite a lot in the past. And I just think it's interesting to keep an eye on this, right? As long as we stay in here, right, and we don't break out, then, there could be some chance for the bears, right? But especially if we break out of this range, and as you see, all the moving averages are in line, the 50, the 100, the 200. It's going to be similar to the kind of sideways consolidations and breakouts we've seen in the other equities index. So just be very, very careful that, especially if you have to learn from what's happened, and you need to study the market. So if you've seen what happened on NASDAQ, Dow, and ES, as long as we hold here on the YM, okay, you can there's interesting asymmetric risk reward for the short side. But if we break out and we get momentum going, there's a good chance we're going to extend. Most people are going to look for this range to extend to the upside in terms of a minimum move, right? But clearly, it's not a market you want to stay stubbornly short if we break out, and you'll probably see the other equity indexes accelerate too. Now, if this breaks down, then it's something to keep an eye out. So I think in terms of the equity indexes, this is the most interesting one to keep an eye out for. In terms of the bonds, subscribers and people who listen to these free videos will remember, we went into last year talking about the most interesting things, positioned long the metals and long bonds, right? So that trade worked out quite nicely towards the back end of the year. Now, the big question is, have we seen the end of the correction in the bonds or not? A lot of people are going to be talking about different kinds of patterns here, cup and handles, whatever, we'll have to see. But I think this is, and especially with the testimony, just keep a close eye on here, right? Because if the bonds let go again, if we can't hold this whole series of higher lows, or at the very least, even if we don't catch a bid inside this zone on this move down, right? Or if we hold and we continue higher, it's going to have very diverse implications on the market, right? So that meaning that if we start to break back below, then it's going to get very ugly for the bonds, right? Because this is it. This is the correction. But as long as this whole area holds, as long as this dip or any dip holds, keep an eye on this, especially if we start to break above this level, then there's a decent chance, we're going to get that squeeze, we're going to get that healthy correction we've been looking for, even though we've already had a decent correction, right? Don't get me wrong, especially as we said, going into those longs at the end of last year, we had about a 4 or 5% correction. So that's a decent correction. But the big question is, are we going to get that bigger correction we were talking about last year, which is, that 10% correction? And this is likely going to be that line in the sand to the upside. But if that gives, then it's going to get very, very interesting. But clearly, there could be a lot of wheeling and dealing, but we feel this is a particularly interesting chart we've been talking about, right? Speaking of the, yeah, okay, let's do speaking of the metals, the most interesting one is silver, right? And as we discussed, let's get on a weekly. And again, you can look, we've had this chart up on the blog for a while. You can go back and read the notes we put out. This was basically one of our most interesting positions for 2017. We're looking for swing long here, and this is in place. So very, very nice move already. Remember, we talked about the 14, 16, 80 as a chop zone. We liked the looking to build longs around the 14. And so far, even off that 14 mark here, off those high, we'd had that decent move about, 38, 40%. Then we corrected back down. We bounced off that zone again, up 20%. So again, it's been a solid area, and we're getting very, very decent moves. So the big question is, what's going to happen here as we approach that 200-day, right? 200-day here. And, even though we get wheeling and dealing, has this started, and is this a strong correction? We're going to have this moving average supporting here. So any dip that gets bought or any squeeze, don't be surprised to see this accelerating higher. And we feel that this is a particularly interesting thing to keep in mind, especially also on gold, all the metals. Keep in mind, it's not, we're getting some funky things in terms of those cross asset correlations breaking. So keep an eye on this, right? Especially even if equities keep on pressing higher. Let's see what happens on bonds. Let's see what happens on the dollar. But if the metals keep on rallying hard, especially in light of, despite the fact that equities are pressing higher, some funky action on the dollar, something's telling you something. So one of these is telling you something. Then it's up to you to decide which one. But we know which way we're leaning towards, right? So again, very, very interesting chart. And then the, what should we look at? Oh yeah, last but not least, let's look at the DXY, right? Because that's basically going to be, rub off on all the Forex pairs, so we can kill a lot of birds with one stone here. And basically, if you go back on the weekly, this is the big question is, have we seen the end of that correction? So you remember when we went back into the year, when we started, we're trading around those 103s, we said 100 before 105 at the very least. So the big question is, that move off those highs where we came back down, we got that 4%. It's similar across the board, whether you're looking at bonds or here, is it that, when we talk about a healthy correction, 5 to 10%, have we had that? Same thing on the bonds, which we moved, 4 or 5%, or do we need to go all the way to the 10%? Now, that 100 is likely going to be a very pivotal level, even though it's a little bit of a, in brackets, dirty level, because it's not like it's being respected beautifully. But the big question here is, have we corrected, and are we going back higher on the dollar? Are we still in the process of correction, and bounces will keep on getting sold, and we still have to come right back down? And most likely it's all going to be down to Yellen this week. But here, keep an eye on the momentum around that 100, but especially the way this is trading. I'd really be interesting to seeing, should we get back into those 102s, seeing how the market reacts into that level, especially if we get back into there, right into the testimony, what happens? If we start to get a strong bid, then you'd expect this level to go. Right? If we see the offers coming back in, that comes in line with the testimony, and we're going back down, then there's probably a very good chance that we're going to come right back down, try and test some kind of ascending trend line. We've got those moving averages much lower, and the number we've been talking about is maybe that 98. So, right here as we're trading around the 100, you got 102 to the upside, 98 to the downside. It's pretty much $2 either side. So not much edge as far as we're concerned. If you're looking at the tighter plays, if you're looking at the bigger plays, there may be some room to position, right? So that's pretty much where we stand. That's what we're looking at this week. So again, I hope everybody has an awesome rest of the day, wherever you may be, whatever you may be doing. Thank you so much again for sharing, for liking, for the comments. And again, let me know if there's anything else you want me to, any charts you want me to post on the blog this week. I'll try and accommodate if I can. Again, thank you so much for listening. Have an awesome one. Bye-bye, guys.